Hey everyone, and welcome back to the AI Tech channel. Today, we're diving into a headline that's got Wall Street buzzing and Main Street scratching their heads. Tiger Brokers, a major player in online trading, is now using a powerful AI model called DeepSeek, or one in their investment platform, TigerGPT. But here's the question that's keeping me up at night, and probably should be keeping you up too. Is this the dawn of a new era of AI-powered investment, or is it just another overhyped tech trend destined to fade away? Because let's be honest, AI is the buzzword of the decade, but how much of it is real substance and how much is just smoke and mirrors? And more importantly, is your investment strategy about to be disrupted by an algorithm? Stick around, because we're going to break it all down, separate the hype from the reality, and give you the insights you need to navigate this rapidly changing landscape. You might be surprised by what we uncover. Forget the usual talking heads. We're digging deep, asking the tough questions, and challenging the conventional wisdom. This isn't just about Tiger Brokers, it's about the future of finance itself. So buckle up, grab your coffee, and let's get started. Okay, so let's get into the details. Tiger Brokers, as reported by Reuters, has integrated DeepSeek, R1 into their AI chatbot, TigerGPT. Now, TigerGPT is designed to help investors make smarter decisions by providing market analysis, investment insights, and even generating trading ideas. Think of it as your personal AI investment advisor, available 24/7. So, what's the big deal? Well, DeepSeek, R1 is a cutting-edge large language model, similar to the ones powering ChatGPT, but specifically trained on financial data. This means it can analyze vast amounts of information, identify patterns, and generate insights that would take a human analyst days, if not weeks, to uncover. Tiger Brokers is rolling this out to users in China and Singapore, giving them access to this AI-powered investment tool. And according to Tiger Brokers CEO Hua, the insights generated by DeepSeek, R1 are so good, they're even inspiring seasoned traders. That's a pretty bold claim, isn't it? But it also speaks to the potential of AI to revolutionize the way we invest. They are not the first ones to do it. Other Chinese financial powerhouses like Sinolink Securities and CICC Wealth Management are also jumping on the AI bandwagon, and this definitely shows a trend. But we need to remember that other companies in the US and Europe may soon follow this trend. This could be a game changer for retail investors who often lack access to the same resources and expertise as institutional investors. Now, let's talk about the tech behind the headlines. DeepSeek, R1 is a large language model, or LLM, which is a type of AI that's trained on massive amounts of text data. These models are capable of understanding and generating human-like text, making them ideal for tasks like natural language processing, machine translation, and, in this case, financial analysis. DeepSeek, R1 is particularly interesting because it's been specifically trained on financial data, giving it a deep understanding of market dynamics, economic indicators, and investment strategies. But here's where it gets really interesting. DeepSeek, R1 likely uses a technique called attention mechanism, which allows the model to focus on the most relevant parts of the input data when making predictions. Think of it like this. If you're trying to predict the price of a stock, the attention mechanism would allow the model to focus on factors like earnings reports, economic news, and competitor performance, while ignoring irrelevant information. This allows for a more accurate analysis. And it's important to remember that these models are constantly evolving. As they're exposed to more data, they become more accurate and more sophisticated. This means that TigerGPT, powered by DeepSeek, R1, is likely to become an even more powerful investment tool over time. The underlying architecture of DeepSeek, R1 is likely based on the transformer model, which is detailed in the paper Attention is All You Need from Google researchers. This model is known for its ability to handle long-range dependencies in text, making it well-suited for analyzing complex financial documents. It's important to remember that this technology is still in its early stages, but the potential is enormous. The integration of AI into finance is not just a niche trend. It's a major shift with significant economic implications. UBS analysts are predicting that AI adoption could lead to a 24% surge in financial IT spending in China by 2025, potentially reaching a staggering 69 billion yuan. That's a massive investment, and it's going to benefit tech vendors who are positioned to capitalize on this AI-driven growth. But it's not just about the money. It's about the impact on the financial industry as a whole. AI has the potential to automate many of the tasks that are currently performed by human analysts, freeing them up to focus on more strategic initiatives. It can also help to improve risk management by identifying potential threats and vulnerabilities that humans might miss. And, of course, it can provide investors with better insights and more personalized advice. So, what does this mean for you? Well, it means that you need to start paying attention to AI and how it's transforming the financial landscape. Whether you're a seasoned investor or just starting out, understanding the potential of AI is going to be crucial for success in the years to come. The old ways of doing things are quickly becoming obsolete, and those who embrace AI will be the ones who thrive. This is a huge increase in investment, and as investments increase, the amount of new startups will also increase, since more venture capital will be available. But let's not get carried away with the hype just yet. There are some very real concerns about the use of AI in finance. One of the biggest is the potential for bias. AI models are trained on data, and if that data is biased, the model will be biased as well. This could lead to unfair or discriminatory outcomes, particularly for marginalized groups. Another concern is the lack of transparency. It can be difficult to understand how an AI model is making its decisions, which can make it hard to identify and correct errors. And of course, there's the risk of job displacement. As AI becomes more capable, it could automate many of the jobs that are currently performed by human analysts. So, what's the solution? Well, it's not about rejecting AI altogether. It's about using it responsibly. We need to ensure that AI models are trained on diverse and unbiased data, that their decision-making processes are transparent, and that we're prepared to address the potential consequences of job displacement. The key is to find the right balance between leveraging the power of AI and mitigating its risks. I'm not saying that AI is going to take over the world, but I am saying that we need to be aware of its potential downsides and take steps to address them. We need to remember that the algorithms may have some inherent bias, and always consider this when making choices. Here's where things get controversial. Some experts argue that AI-powered investment tools like TigerGPT will democratize finance, giving ordinary investors access to the same sophisticated analysis that was once only available to the wealthy elite. They believe that AI can level the playing field and help everyone make smarter investment decisions. Others, however, are more skeptical. They argue that AI is just another tool that will ultimately benefit the already rich and powerful. They point out that the algorithms behind these AI models are often proprietary and opaque, making it difficult to understand how they work or to identify potential biases. They also worry that AI could lead to a concentration of power in the hands of a few tech companies that control these algorithms. So, who's right? Well, the truth is probably somewhere in the middle. AI has the potential to democratize finance, but it also carries the risk of exacerbating existing inequalities. The key is to ensure that these AI tools are developed and used in a way that benefits everyone, not just a select few. We need to demand transparency, accountability, and fairness. We need to be critical of the claims made by tech companies and to hold them accountable for the impact of their products. And we need to remember that AI is just a tool, and like any tool, it can be used for good or for ill. The choice is ours. One way to verify the potential bias would be to run the AI on a set of historical data and see what investments would have been made, and if the returns are different for different demographics. So what does all of this mean for the future of finance? Well, it's clear that AI is going to play an increasingly important role in the years to come. We're likely to see more and more AI-powered investment tools emerge, and these tools will become more sophisticated and more powerful over time. This could lead to a more efficient and more accessible financial system, but it also carries the risk of creating new inequalities and vulnerabilities. The key is to embrace AI responsibly, to be aware of its potential downsides, and to take steps to mitigate its risks. We need to ensure that AI is used to benefit everyone, not just a select few. And we need to remember that AI is just a tool, and like any tool, it's only as good as the people who use it. As AI continues to evolve, it's crucial that we stay informed, stay engaged, and stay critical. The future of finance is being shaped right now, and it's up to us to ensure that it's a future that benefits all of humanity. So what are your thoughts on the integration of AI into finance? Do you think it's a game changer, or just another overhyped trend? Let me know in the comments below. I'm really curious to hear your perspectives. I'm very excited to see how the future of finance will continue to evolve. In conclusion, Tiger Broker's integration of DeepSeek, R1 into TigerGPT is a significant development that highlights the growing importance of AI in the financial industry. While the potential benefits are undeniable, improved market analysis, personalized investment advice, and increased efficiency, it's crucial to approach this technology with a healthy dose of skepticism and a critical eye. We need to be aware of the potential for bias, the lack of transparency, and the risk of job displacement. We need to demand accountability from the tech companies that are developing these AI tools, and we need to ensure that they are used in a way that benefits everyone, not just a select few. The future of finance is being shaped by AI, and it's up to us to ensure that it's a future that is fair, equitable, and sustainable. So, that's it for today's episode. I hope you found this analysis helpful. If you did, please give this video a like and subscribe to the AI Tech channel for more in-depth coverage of the latest AI trends. And don't forget to leave a comment below and share your thoughts on the future of AI in finance. What are you most excited about? What are you most concerned about? I want to hear from you. And as always, thanks for watching, and I'll see you in the next video. Don't forget to subscribe to our newsletter and stay in touch with us. Always be curious and keep learning new things. The future is here, and it's up to us to shape it.